Good morning. Welcome back to the live stream. Today is December the 8th. It's Friday, NFP Friday to be exact. Just want to take a peek at the charts and see where we are. We did have red folder news at 8:30. As at 8:30, we had the average hourly earnings. We had non-farm payroll change, and we had the unemployment rate come out. And just 2 minutes ago at 10 o'clock, we also had a red folder of the preliminary University of Michigan consumer sentiment. All of these numbers came in positive for currency, which should have the opposite effect for indices and any other commodities that are being sold, all stocks. So it would not surprise me if we had some bearish movement today and sought lower prices. Since we just had a red folder at 10 o'clock, we do need to let the market settle a bit. So we'll just watch it and give it 20, probably till 10:30 before we actively engage in the market as far as trading. But we will continue to watch for setups. We'll continue to watch for trends, and we'll go from there. Okay, just like yesterday, it looks like the new week opening gap is an area of interest. So we continue to see price return to that level. We saw it return here, hit the midway point, reject off of it. Now at 10 o'clock, the news event sent it through the new week opening gap, and now it's just playing on both sides. Hasn't decided which direction it's going yet. We do, since the 8:30 candle, we do have a bullish trend. So if we were looking for a setup, we'd be looking for longs. But right now is where we stand. We're at essentially where price opened yesterday at 1800, right? Price is here right now. 1800 was right at the new week opening gap. Price sold off during London, the tail end of London, early New York session. And then we saw it return to where those prices were. So not a lot of progress today so far, just a bearish trend followed by a bullish trend back to opening prices. Be right back. Give me 2 minutes to return. Right, I'm back. Okay. Okay, we're at a low swept here. New high made. Actually, we had lows, several lows swept. 3, in fact, on its way down. So if we took the entire manipulation leg and we set up right here, five and a quarter, big profit, 5 even. 20 ticks. There we go. Clean up the charts a bit, but we're just reviewing a potential trade that happened right at just after 10 o'clock. We had a new high made. Take a Fibonacci on the manipulation leg down. Take a long entry for a 5-point scalp at 30% retracement. Shift this down right there. So as you can see, what happened was it dipped in for maybe 2 or 3 ticks. So very little drawdown, and immediately ran for the 5-point take profit. For anyone new and not familiar with the 5-point scalping model that I use, it's on a 30-second chart, and it requires only a few steps. So the first thing you need to identify is the trend. I said we had a bullish trend. You can see it's making higher prices. We had a low down here at 8:30. We were here at 10 o'clock. So clearly there's been a lot of bullish momentum, right? And so what you want to do is you want to identify a previous high for this trend. If you're looking at a bullish trend, you want to identify a previous high. You then, after that high was made, you want to see a low taken. In that case, it wasn't too much after the high. It was 2 candles later, it created a low. 4 candles later, that low was then taken. A lower low was made. Once that happens, you're now waiting for this high to be eclipsed. So you need a new high to be made, which then lets you know the market is still moving in the direction of the trend. So you're waiting for the market to tell you it wants to move in the direction of the trend. It waited for news at 10 o'clock. Once news happened, you saw an impulse candle clear this high all the way up to here. Once that occurred, you then will look for the range from the high until the low that it made that then created a new high, right? Because since we're bullish and we're expecting higher prices, lower prices is what we consider manipulation. Once you set up your Fibonacci, then you wait for price to retrace to 30%, and you take a long from that 30% value for 5 points. Make that a little larger. And you can see the 5 points ended here at 16,016.75. And in fact, it's not even 5 points, it's 5 points and a quarter. You can see it's an extra quarter point added to the win to take care of any fees that are levied by the broker. And in this case, it's going to be commissioning fees. When you enter a trade, they charge you a little over $1.25. And then when you exit a trade, they charge you again. So for the whole transaction, it's just over $2.50. So the extra quarter point covers $5, and it'll cover commissions for winning trades. Obviously, for losing trades, you pay the commission and you lose the $100 per contract. But on winning trades, assuming you're more than 50%, you get double the commission rate for that extra quarter point. So it should cover you. Okay, let's remove these lines, clean up our charts, and continue looking for setups. Okay, let's see if we've had another setup since the last one. This was the high that was made prior to the retracement. Okay. Now, after that, we're just looking for each of these lows to see where's the first one that is going to get swept. So far, none of the lows have been taken until here. We finally have a low that was taken. On the move down here, it took out this swing low. Following that, it made a new high. Because before this low was taken, this was the high. The high was right here. So we set that up. After the low was swept, we wait for the high to be swept. The high was swept here. We draw that up. We place our long tool at 30%. And we wait for price to return. I generally will reevaluate trades if price moves 25, 30 points away from where the setup is. Then I'll just wait for a new opportunity as opposed to waiting for it to come back. Because what you find is when price makes that far of a retracement, sometimes it does it with momentum and with large candles. And as you can see, our stop loss is only 5 points from the entry. And it's very easy for that to be tapped into if those candles are large and if there's a lot of momentum going the opposite direction. Okay, we also have a low taken here, just in case it wants to do a setup in this area as opposed to return down in between these purple lines. I'll highlight that here. Okay. Once again, I was on mute. Unbelievable. Chris, man, I need you to start joining a little earlier. So if I'm on mute, you can let me know. No one else is telling me I'm on mute. Good morning. I just walked through an entire setup for the last, I don't know, 20 or 30 minutes. We've had several setups. I didn't realize no one was hearing me. But anyway, anyone who's following on the video, you can see if you understand the setup. But let me go through this again now that I'm off mute. Okay, we switched down to the 15-second because on the 30-second, we didn't see a low being taken after this market structure shift here. We saw price break through, and then we started looking for highs to be broken, and we didn't see any. So I shifted over to the 15-second, and I noticed this one here. This high here was then swept on the movement up, and then we saw breakdown. So from there, sorry, oops. Oh, sorry. There we go. I don't know what shortcut I hit, but it moved me to another index. It moved me over to the US dollar. Okay, so once we saw the high broken here, then we shift over and we look for the low to be taken, and it was. And then we come and we set up our manipulation. We make this larger for everyone. Oops. Where's the short tool? Oh, it's gone. All right, let me reset up the short tool. All right, we set it up with a 5-point stop loss. $5.25 take profit, and you can see a tap in this area. Make it larger. Just across the threshold, and then it sold out. It even came back a second time and sold out there too for anyone who missed the first entry. Okay. What I was showing was there was actually a second entry after that, or another entry on this leg that produced actually a loser for the 30%, but a winner for 50 and 70%. And let me go ahead and set that up for you. So it was a high here that was swept. Then the low was taken. Manipulation. Shift this down 30%. Made a new low. Came back in and came out by just one tick right here, just a tick. But anyone who wanted to enter at 50%, see, they survived and took profit. And then also anyone who entered at 70%, just tapped them in, just barely. You'll see just barely by a tick, and then delivered profit. But as I was explaining is that because this first one delivered and the second leg is essentially in the exact same spot, you had a low created here, and this low is maybe a point below it. Down here is also a 1.5. So the manipulation is going to be in the exact same area. And for that reason, I would not have taken a second or third trade. I would have waited until we got down in this area to resume trading. Excellent, Chris. I'm glad that you were able to profit from this and the scalping model actually makes sense to you. Hopefully, it makes sense to others as well. If anyone else has questions, please throw it in the chat. Um, I didn't realize I was on mute for the last 30, 45 minutes. So if you have any questions or if you want me to walk through another setup, please let me know. Glad you were able to rebound as well, Chris. Trading is definitely an up and down type of situation, but just make sure you remain confident. Make sure you stick to your rules. Continue to follow them. Stay disciplined. I have no doubt you'll become a winning trader soon. All right, we're back down in the area of our trusted friend, the new week opening gap. This purple dash line is also an indicator that I use, and this is the midnight open. So it lets me know when we're back at the same price that the start of the calendar day, not the 1800 trading day, but the actual calendar day starts for New York. Okay, Chris. Yeah, if you can't join for the next hour or so, I will jump off in about 40 minutes, but I'll be back on this afternoon. So take care, and I'll talk to you this afternoon. All right, let's switch back over to the 30-second. We've been on the 15-second for most of this price leg. But now that we see the slow penetration upwards, we know that we definitely have some highs being swept on both time frames. So we can go back to the more reliable and conservative time frame, which is the 30-second. All these highs that have been swept. Now we're waiting to see if price wants to make a new low. And if it does, we'll look for another short setup. Okay. We've now shifted back bullish for the short term. Okay. The shift actually occurred during all of this movement upwards. It's now been confirmed. We had swing low taken here, and then a new high put in. So because of that, we can now move our short tool in position. Sit there. And this would be the setup. If anyone new, just join. If you're not familiar with the 30-second scalping model, let me know in the chat. I'll walk you through the last setup that we had, which is right in this area on the short down. I now have a long setup right here in this area once we get a retracement. Move some of this off the charts. Okay. So in this area, we actually we didn't see any. We were short, or we were bearish, and we didn't see any highs being taken. So what we did is we shifted off the 30-second down to the 15-second. And so in that case, what we saw was swing high right here. Let's move this out of the way. So we saw a swing high taken. From there, we then looked and we were waiting for a swing low to then be taken afterwards. We saw a crash down, making a new low. So from there, we took our Fibonacci tool and we wanted to take this manipulation area. We were bearish, so the move up became manipulation. And then we look for a short out of the 30% retracement. We put a 5-point stop loss and then a 5-point take profit. Make this larger. Remove this. Okay. Remove these purple lines. We don't need them any longer. And what we saw was price bought into the zone, tapped us in, activated the trade. And then you saw price run out and delivered a profit one candle later. So about 30 seconds was the time in that trade. We then saw a few minutes later, price returned into the area and it delivered as well a second time. Let's resume back to where price is now. Okay, so while we were just talking, I was going over a previous trade and a new one happened. So we switched back bullish once we had this high taken, when it broke through, we said, okay, now we're bullish again. We kind of consolidated for a little bit, broke down, took out a low, made a new high. So that's essentially our setup. We need to see a low taken. Once the low is taken, then we need a new high to be made. So the previous high was here. We saw it break through on the way up. We set up, this would be our manipulation from that high to this low. And we waited for a 30% retracement for a 5-point take profit. And we can see that delivered again. Okay. It delivered on 30% retracement. For those that are more conservative, you could take 50% retracement. It delivered there as well. And if you're even more conservative than that, let's see if 70% delivered. It didn't quite make it to 70%. So if you were looking for a 70% retracement, there wasn't a trade for you. All right, so that's what, 3 or 4 in the last hour. Okay, let's remove some of these lines, clean up the chart so we can see price action. Okay, we're bullish, so remember, we're looking for lows to be taken. We have a low here that's been swept. Now we need a new high to be made. And that's what we're waiting for. We're waiting for a new high. Once that happens, this will be the move. And it just happened. So now we have a new high. This level to this level becomes our manipulation. And we set up the long tool again. For me, when the manipulation is this size, because remember, this is a scalp of only 5 points, you can do one of two things. You can extend your stop loss and your take profit to be larger values, or you can just enter at 50%, which is a more conservative entry. It gives you a deeper retracement before you're stopped out. However, it decreases the likelihood that you actually get in the trade. Because as we can see now, at 50%, we're not in a trade. And at 30%, we are in a trade, and the next candle delivered. So we were in and out. That trade has already happened, and it delivered 5 points to anyone who took it. Oh, sorry, 15 second. Yeah, we're on the 15 seconds still. Sorry, back now to the 30. Yes, Brett, this is a scalping model. Typically I'm done on a 30 second. I do jump down to the 15 seconds sometime when I'm looking for either a market structure shift or some sort of liquidity to be taken. Sometimes on the 30 second, it won't actually be a swing high. It'll just be one candle. And you need 3 candles for a swing to be made. So dropping down to the 15 second gives you twice as many candles. And therefore, it's a little more likely that you get that swing to be broken. But in this case, even the 30 second, you can see the trade activated right here. And the very next candle delivered the 5 points. So let's walk through that again. Let's move this out of the way. Okay. So again, here on the 30 second, we did not have a low being taken. I shifted down to the 15 second. We had a low that was this low here. Was taken. Once that happened, then we then looked for a new high, which we had. Oops, sorry. This was the high. So then we got the new high. And we set up our long tool. Over here on 30%. Traded down in and out on the very next candle. Oops. For any of you who are new, if you could like the video so YouTube can push this out to others looking for live traders or live streams, that's much appreciated. Anyone who is enjoying the live stream so far and you want to be invited for the next one, please subscribe to the channel. I'm typically on in the mornings and the afternoons, at least the last couple of weeks I'd like to continue that, but I just want to make sure that's a time that people want to join on. So I send out YouTube sends out the invites to everyone who's subscribed to the channel, and that allows you to know when I'm on and what time, because it does fluctuate sometimes. But I try to do AM sessions from 10 to 12 and afternoon sessions from 1 to 3, although I've been staying on till 4 o'clock mostly. So now let's move some of this out of the way. So if we're still bullish, we're looking for a low to be taken, which has already occurred multiple times. That's one, that's two. Actually, let's go back to the 30-second. So we see the same thing on the 30-second. That swing low has been taken. We're now looking for a new high. So this was our previous swing high. We can get a new high, then we'll look for a long. Otherwise, if we get price dipping below this purple line, then we'll sit on the sideline and wait and see if price wants to become bearish. We still have the new week opening gap that price continues to return to. It's been here virtually the last 24 hours, just bouncing off of it, either above or below. And we can see price wants to return to it now. Okay. Even dipping below the 50%, just like before, when we see it return down, we want the bodies, the candle bodies, to close above the 50% line to give us confirmation that we're going to remain bullish. That is not happening on this candle. We had a break below. It looks like it's probably going to close below, so we may see lower prices delivered. Okay, closing in on this tiny new day opening gap from yesterday. This little yellow highlighted area. Okay. All right, we have some pretty aggressive price action right now. Let's clean up our chart. If you want to look at a larger time frame, on the bottom left hand corner is the 5-minute. You can see pretty much what's been happening since around 9:30 this morning. Okay, we moved past the 60% retracement level from the leg that happened from 8:30 this morning until around the 10:30 high. It's retraced about 60% of that. %70 retracement is down at 16,000 even. For anyone not familiar with the price of Nasdaq movements, these scalping trades for 5 point take profit. 5 points is worth $100, 100 US dollars, and that's per contract. So then, depending on what your risk tolerance is and how much you're willing to wager, you just change the amount of contracts that you want to put on a trade. I typically trade 5 contracts, um, but sometimes I'll trade 1 or 2 depending on how confident I am in price action. Okay, looks like price is rejecting off of the new day opening gap. So that's the price. That's the difference in price from yesterday's 1700 to yesterday's 1800 reopening. And that is the yellow shaded area. The green shaded area is the new week opening gap, which is a variance in price from last Friday's close at 1700 and this Sunday's opening at 1800. Okay, candle body below the new day opening gap, rejection off of that. Let's see now if we continue to see lower prices and we see a new low put in. All right. So remember, we're bearish now. Now we're bearish. We're looking for new lows. We're also looking for highs to be swept prior to entering a trade. So right now, I don't see any highs being swept, or none have been swept for quite some time. Let's drop down to the 15-second and see if maybe we missed something. Right, and by doing so, I can see right here there was a swing high. It was taken a couple candles later here. Now, if we see a new low, we can potentially short. Okay, let's see if we get a rejection off the new day opening gap. We did on this candle. It went right up to the lip of it and then rejected out. Okay, let's see if we get a new low made. Get ready and just go and grab our tools. Just have them nearby. All right. Okay, we want to pause for a moment now. Now that price is now rejected, coming bearish. It's not made a new low, has instead taken out the high that made the new low. Well, and take that back on this time frame. No, the high that they made the new low would be up here. So we're still bearish, but we're still bearish. But price is making making higher prices now, and we're back above the new week opening gap. Go ahead and remove some of this. Shift over to the 30 seconds, see if it's a bit cleaner. Right, so this entire zone, we're going to be bearish, even if it gets up here. Until it makes a newer low. This level at 16,056, which is a key level for us right now. It won't shift down until we make a new low. All right, price now appears to be stuck between the new day opening gap and the new week opening gap. Yes, craft. You're right. I did learn this from Cami Capital. Absolutely. Just like where Cami learned it from others and he tweaked it a little bit to make it his own. I've done extensive back testing on this strategy and I tweaked it a little bit to make it my own as well. But it's essentially the strategy from Cami Capital. Okay, back in the new week opening gap. Looks like we may trade north of it, possibly. So far, we've only wicked out of it, but price is wanting to sit inside. Okay, another wick. At least we got a candle body above the 50%. So far today, oh, don't quote me on this. I believe it's 3 wins and 1 loss, or 4 wins and a loss. I haven't taken the trades. I've just been identifying them and setting them up. Um, Today being NFP, and I've had a good week so far. So I haven't taken any trades this morning so far, but I have been just marking them up, um, and just showing everyone else how the strategy works. And it's been pretty successful today. Okay, for anyone who's just joined, we're still bearish. We're still looking for a new low to be put in. We've had several highs swept from this high. We had this high swept, this high swept. And so we're just waiting for a new low to be put in. Once a new low is put in, we'll look for a short setup. Outside of that, we're not really looking bullish or looking for longs until we make it back up here, which is a good distance away from where we are right now. And we seem to be struggling on this new week opening gap, which is this green shaded area. And then the yellow shaded area is the new day opening gap. So that's where price is stuck right now. Okay, we'll go on for about another 10 minutes, and then we'll break for the New York lunch session, and we'll come back starting at 1 o'clock. So I want to make sure if anyone has any questions or any comments that I'm able to answer those. Please throw it in the chat. If you're liking the live stream, please like so YouTube can push it out to other viewers looking for the same content. And if you want to join this chat in the future, please subscribe so you'll get invited to all the scheduled live streams that I have. Based on the fact that we're still in the new week opening gap, that means this afternoon is going to be the deciding factor on what the weekly candle looks like. Right now, there's no body. It just shows the extreme down wick from earlier in the week when we made lower prices. There's a small up wick from this morning where we made the high of the week. And right now, there's no body. We're sitting right where we started Sunday at 1800. And right as I say that, we get a candle body outside of the zone finally. Seems like it always happens like that. As soon as you say something, then your statement is immediately invalidated. 70% retracement on this leg. Let's see if it wants to be bullish. Okay, we're right back in between the 50% mark of the new week opening gap and the new day opening gap. Seems like we've been here for the last 20 minutes. But we can see from even earlier, we're in the new week opening gap at 10:40. We were around in here at 10 o'clock. Traded into and off of, rejected the 50% mark at 9:45. And if you were with me yesterday afternoon, you will remember the last couple of hours was teetering around the new week opening gap. So I'll leave this view so you can see how far we have to go for a market structure shift. But if we go down and tag that purple line, then we're looking at a short setup. However, the manipulation leg, previously we were looking at it potentially being this size. Now the manipulation leg is this size. It will be the entire movement up prior to making the new low. Whenever I have a manipulation leg this size, I generally err on the side of caution, and my entry would be placed at 50% mark as opposed to the 30% entry. That gives me a more conservative entry. It also gives me a slightly deeper area where it can retrace into and not hit my stop loss. We got to remember this is only 5 points, so it's a very small scalping model. And this range here from 41 down to 10, so you're talking about a 30 point range, right? If I'm entering at 30% and it can stop me out before it even makes it to a 50% retracement, that's for me a low probability trade, because I know there's a good chance price likes to return to 50%. Okay, we've crossed over and now it's 12 o'clock. What I'm going to do, I'm going to end the feed now. I hope you all can join me in 1 hour for the afternoon session. Please look out for that link. It's already out there. The invite for the next session. So I hope to see you at 1 o'clock for the afternoon session. Thanks for joining, and I'll see you then.